In this video, we'll be taking a look at the future analysis to get us prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So my screen here, this is a gold chart on a 4 hours time frame. Last week, we talked about the possibility of gold taking out this area of resistance, which would signal, a buy trade opportunity. And I hope and I believe you guys took that trade opportunity, and we had a clear breakout on Thursday last week and led to a 500 pips move to the upside. So if you take a measured price movement, so these are approximately 500 pips, and I'm still on this trade. I've not, I haven't exited the trade yet. I took out some profits for closing some of my position size, but I still have a huge chunk on this trade. So what are we going to be watching out for this week? This week, I don't think we're going to get some really nice trade opportunities, because the best trade opportunity was to enter immediately we got our breakouts. And right now, I think that ship has sailed. But you could anticipate a move to the downside in sort of a pullback or a consolidation and a bullish breakout as a sort of a bullish continuation pattern for you to go long. So in this market, or in this type of market structure, you shouldn't consider going short. There's just no reason why you want to short gold right now, because the structure looks extremely bullish. So this, the best case scenario for a bullish opportunity right now is waiting for a pullback on a 1 hour time frame. Mind you, are taking a look at this from the 4 hours time frame. So the reason why I'm checking the 4 hours time frame, so I can fit the entire chart on my screen. So let's see, if I go down to the 1 hour time frame, let's see if that's going to work. Okay, so this is the 1 hour time frame, right? So getting rid of this for now, just gonna draw this again. So in the 1 hour time frame, what you should watch out for is a pullback to the downside, give you some sort of a consolidation, bullish continuation pattern, followed by a bullish breakout. So this will confirm a bullish continuation and potentially an opportunity to go long. So this may happen like this. It may form a symmetrical triangle instead. It may form a bullish rectangle. It may form a ascending triangle. It may form a falling wedge. So whichever pattern it forms, provided we will get a bullish breakout at the end of that consolidation, that will be your confirmation to go long in continuation of this massive move to the upside. Because I don't see any reason why you want to go short. So alternatively, we could get an extended price decline if something happens in the market, and we get a retest, consolidation, followed by a move to the upside in form of a reversal. I honestly don't think this is going to happen. This is highly unlikely. If you're waiting for a retest, it's highly unlikely, but it's possible because anything can happen in the market. So this could potentially provide us with another opportunity to go long if the first case scenario doesn't play out as expected. So that's it briefly for gold. I won't be going short right now. As you can see, I know the RSI seems overbought, so you feel there's a good reason we probably get into this safe zone before we keep going up. Meanwhile, that doesn't mean the price is going to come back all the way to this price level for a retest. So a movement to the downside as low as these price levels could be good enough for a RSI reset before we go higher, right? So that's something to pay attention to. So that's it briefly for gold. Moving on, we're talking about Nasdaq, another clean trade opportunity. I think this week is going to present us with, I'm not going to miss this trade opportunity for any reason. So you too, just watch closely so you see what I'm watching out for to go long. Number one, I won't be going short. I know a lot of traders will want to go short when we get into this area of value, taking a short position. And why I think that's a bad idea is because the dollar seems to be weak right now, and the US economy seems to have been getting a signal from the Feds that they're going to cut rates soon. So this anticipation of rate cuts could lead to price increase in the stock market. And as you know, US100 is a stock indices from the United States. So there's a good chance we take out this resistance level this time. I'm not trying to say there's no way price is going to reverse. There's a good chance we also hit this area of resistance and fall back down, right? But it's highly unlikely, and it's just going to it's just too much risk of a trade to take, in my opinion, for me to go short right now, because setup looks bullish, gold has broken out, gold looks bullish, so there's a good chance Nasdaq becomes bullish as well. But for me to go long on Nasdaq, I'm going to wait for, I'm simply going to wait for price to consolidate a little around these price levels, then give us a good bullish breakout, right? So the moment we get a bullish breakout, then my entry is going to be around here. My stop loss is going to be below the consolidation that leads to the breakout, and my take profit target is going to be around its highs. So first take profit target, then I'm going to trail the rest of my positions as we go higher. This is how I'm going to trade US100. Other than this, I'm going to stay away from this chart. So if you're interested in taking some risk, you have a good risk management, but you're not scared to take risk or lose a few bucks, I don't recommend this, but you could go short when we come into this area of resistance and get a reversal pattern, right? So your stop loss is going to be slightly above the resistance level. So that's the only reason why I'm even talking about going short, because you tend to get a very tight stop loss between your entry and, you know, where the price at which you're going to set your stop loss. So there's going to be a tight stop loss because the stop loss is going to place directly above the area of resistance, because I think if we close above this area of resistance, then we should head higher. So the only reason why you should even consider going short is because of the risk to reward ratio, which provides us with a very tight stop loss and a good potential price target to the downside, right? But for me personally, I wouldn't be going short. I wouldn't think of that because I'm a breakout trader. So I'm simply going to wait to see what the market does. So we could hit, you know, reverse a little, then finally get our breakout. After which I'm going to get into the position for a long trade opportunity. So that's it briefly for Nasdaq. Nothing much to see here, and the structure would eventually or probably turn up to be an inverse head and shoulder. You can see this is a head. Over here is the left shoulder, and over here will be the right shoulder if this plays out as expected. Mind you, this is a 4 hours time frame. I would be looking for my entries on the 1 hour to 2 hours time frame. Meanwhile, we are also getting to the overbought level in the RSI. So that's the more reason why I think we're going to get a slight consolidation over here to enable the RSI cool down a little before we break out from this resistance level going higher. So that's it briefly for Nasdaq. Moving on, we're talking about crude oil. Crude oil daily time frame. This one looks clean as well. We've been following this symmetrical triangle for a while now, and we seem to have taken out the support level of the symmetrical triangle. So I'm simply still waiting to see what price does, waiting for some sort of confirmation that we're going to go lower before I jump into a sell trade opportunity, right? And that confirmation, we're waiting for price to get into this area of value, give us some sort of a good reversal and a continuation to the downside. So when this happens, then I'm going to be waiting for my setup to get confirmed so I can pounce on the market and get into the opportunity to go short. So going short will look like this. So it's going to look something like this. So something like an ascending triangle with a bearish breakout, a symmetrical triangle, a bearish rectangle, and stuff like that. So just a solid confirmation with a bearish breakout to serve as a sort of a bearish continuation pattern, so that I'll be watching out for to go short on crude oil. Meanwhile, this is the daily time frame. I'm going to be watching out for these patterns between the 1 hour to the 4 hours time frame for better confirmations, right? So it may take a while to play out, but I do think this week we're going to see some actions. We're going to see this setup starting to play out. Then probably by next weekend, we're going to review this chart and see if it's ripening enough to give us an opportunity to go short, right? So the reason I'm being patient is because we may just, you know, reverse and keep going up. So there's a good chance this happens, right? But to prevent that, to avoid ourselves from, you know, getting into a short squeeze, then we wait for our confirmation, which is this pattern for us to go short, right? Meanwhile, another thing to take note of is we are currently trading around a good area of support. So there's a good ton of support over here. So that's the reason why I think crude oil is likely not just going to break through this level with ease, right? So we're going to get some resistance, sorry, some support, yes, prevent the price from going lower, so which will give rise to this consolidation. So the consolidation could take different shapes, forms, and patterns. So it could even be like this. So it could even be like this, you know, like this, followed by that bearish breakout. So anyhow it forms, as far as we get a good breakout at the end of the consolidation, that will be my confirmation to go short. So that's it briefly for crude oil. If you're watching this, I implore you to be very, very patient with crude oil because it can be sneaky, right? You don't want to jump into a trade and end up hitting stop loss before the market starts going in your predisposed direction or anticipated direction, right? So that's it briefly for crude oil. Moving on, we're talking about USD-JPY. So USD-JPY, we've been bullish for a while now. This is daily charts, and I do think we are still going to go lower, But the reason why I'm bringing this chart to your attention right now is because we are currently trading around a significant area of support. So this is a daily time frame, so this support seems to look solid. So for me to go short, I'll be waiting for a good consolidation around these price levels, followed by a bearish breakout. Meanwhile, I'll be waiting for these consolidations on the 4 hours to the 1 hour time frame. So this is daily chart. I'm only using daily chart right now so you can clearly see the full picture of the chart. So you can see this is clearly looking like a range. So we have a resistance level over here, we have a support level over here, and we have a mini area of support over here as well, which is preventing the price from going downwards this time. So I'm going to wait for a consolidation followed by a bearish breakout to go short. That will be my confirmation to go short. Meanwhile, the consolidation may also lead to a short-term pump to the upside. So we may get a pump like this, consolidation, before we eventually break to go lower. So that consolidation may give rise to lower highs. So something like this, so something similar to what we had over here, right? So we may get something like this price hitting this price, creating a lower high and going back down before we go short, right? So meanwhile, I'm going to be watching out for this on the 1 hour, 2 hours to 4 hours time frame. So pay attention to that. So the daily chart is just to help you see the full picture of the chart, right? To get a full scope of what we're talking about here. So meanwhile, if this breaks out on Monday when market opens, I'm not just going to jump into a sell trade opportunity, right? I'm not going to jump into a sell trade, because there's a good chance we end up going higher, which will turn to be a fake out, give us a bullish divergence, and then fall down. So by this time, you'd have lost some money before price eventually starts going down. So that's why I'm going to be waiting patiently for those consolidations to confirm the price movement to the downside before going short. And the consolidation will look like this: pump to the upside, move to the downside, consolidation, and then a bearish breakout. So this is something I'll be watching out for to go short on USD-JPY for those trading USD-JPY, right? Moving on, we're talking about US500. So US500, S&P 500, whatever you want to call it, looks similar to what we have on Nasdaq, and we are clearly, heading towards an area of resistance. You can see I have my price alert set above this area of resistance. So when price gets into this zone, I am going to be alerted and I'm going to take appropriate actions. So we first got into this area of resistance and we saw a massive rejection to the downside, which was held by this mini support over here and gave rise to a massive pump to the upside, right? So for me, I'll be watching out for a move to the upside into the area of resistance, a good consolidation followed by a bullish breakout. Meanwhile, when I say consolidation, I don't mean the price is going to form these exact patterns. What I simply mean is I don't expect price to break out from the resistance level immediately or easily, right? So the name, as the name implies, the resistance level prevents price from moving higher, right? So we should see some sort of price action to signify that this is indeed a solid area of resistance, and the market will have to struggle a little for us to break through this level before we go long, right? So that's the reason why I talk about consolidation, because these consolidations are sort of a signal that there's a tussle, there's a fight, there's a struggle within the market, between the bulls and the bears, between demand and supply to send price higher. Another reason why I think this is going to happen is because when price breaks through this area of resistance, it's clear sky. So price discovery for S&P 500, new all-time highs and all that. So I don't expect price to break through immediately. That's why I'm waiting for a consolidation before we go long. So if this happens, I'm going to go long on the breakouts. Stop loss is going to be underneath the consolidation, at least to the breakout. Then my entry or my position is just going to be trailed as we go higher, because there's no clear price point to set your stop loss. So you could even aim for as high as 2,000 pip, which is not a very big movement when you talk about the S&P 500, right? So 2,000 pip is just going to be, if you take that entry from your, if you take the trade from your entry, the price movement to around $5,875 is going to be 2,000 pips movement after we get a breakout, right? So that's going to be a decent trade if this happens. But the point is waiting for a solid confirmation and a strong bullish candle breaking out from this area of resistance for us to go long. I won't be going short on US 500. It makes no sense to go short right now. I'm only looking to go long because the structure we have on charts signifies a bullish trade opportunity, as you can see from the price action, creating higher highs and higher lows. So that's briefly for US500. And lastly, we're going to be talking about GBP-USD. So GBP-USD looks good, higher highs, higher lows, and right now we just retested or bounced off of this area of value. So a resistance level now turned support. So I expect price to trade around this range for a while before we do get a breakout from this trend line. So this trend line right now cuts across just two highs. So 1, 2. So 1 here, 2 here. So it may not be as valuable or as valid as I would hope, but that's just the price level we're watching out for a good breakout for us to go long. So I want to see what price does when we get to this trend line. So we may touch the trend line, go back down, touch the trend line, go back down before we eventually, take out that trend line. So whenever that happens, or if it plays out like this, I'm going to go long when we take out the trend line. And if we should take out this area of value, take out the support level, I wouldn't be going long on this support level because we have room underneath this price level for a retest of this trend line. So if we should take out this area of value, so come here, for example, we'll take it out, I would simply wait for price to touch this trend line for me to go long. I'm going to go long immediately we touch the trend line because it's going to give me a very tight stop loss, putting my stop loss just underneath the trend line in case we get those, snap trade opportunities from GBP-USD. So that's my outlook for GBP-USD. I wouldn't be going short. I'm only looking to go long. So even if we do get a short trade opportunity, it's only going to guide me and prevent me from going long when I know there's a good chance the market is going to go down. So just because I know market may go down doesn't mean I have to jump into a trade position, a short trade position, because the structure is bullish. That your short trade position could turn bullish at any time. But trading, going for a buy trade or waiting for a bullish trade opportunity means you are trading in line with the market structure. You are trading in the favor of the market, which means you are likely going to end up that trading profit, other than trying to counter trade the trend. Trend is your friend. Stick with the trend. When you see that the price is going to go the opposite direction of the trend, then that should give you a signal to stay away from the market rather than trying to counter trade the trend, right? I hope you got something from this video because this is the last chart we'll be talking about this week. Once again, if you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. We've got over 4,000 enrolled students and tons of positive reviews. And lastly, if you are not part of our Discord community yet, use the link in the description below to join our Discord. It's totally free. You get to interact with other intelligent traders within our community. So that's it for me this week, guys. See you next week.